Today we're taking a look at a few chart analysis for the week ahead. If you love the content, please subscribe to our channel, like the content, and leave comments. Also check out our Instagram page. We've got lots of great educational content over there. Now let's get started. So today we'll be starting with the DXY. So this is the dollar strength index. Okay. Since the dollar has been a major move in the forex market this past few months, I felt it's necessary for us to start with analyzing the DXY. So the DXY actually shows us the strength of the US dollar compared to a basket of other major currency pairs. So as you can see on the chart, this is a daily time frame. This has been a massive bullish ride since the beginning of last year. So basically for a year and a half now, we've been on this bullish rise on the DXY, which shows the strength of the dollar. So you can see price making higher highs and higher lows. So one of the importance of the DXY is that the strength of the dollar shows us that the dollar is actually strong when compared to other currency pairs. So that's why for major currency pairs, a strength in the dollar shows that, okay, for currency pairs having the US dollar as the quote currencies, there's probably going to be a decline in their exchange rate. Okay, so I'm talking about the EURUSD, GBPUSD. So whenever you see massive moves like this for the dollar, it means there's a potential, or there's a probability that currency pairs having US dollar as the quote currency are going to decline. So that's for EURUSD and GBPUSD. While for major currency pairs having the US dollar as the base currencies, so like USDJPY for example, a bullish move like this signifies a potential rise in the exchange rate between currency pairs having US dollar as the base currency, so currencies like USDJPY. So which gives us insights and the opportunity to look for trade opportunities to go long. So that's basically it for the DXY and this move here. So I'm just going to go down to, let's say, the 6 hours time frame, so we can see this clearly. So this bullish move here from last week on the DXY is actually one of the reasons why we saw some massive bearish movements across major currencies having the US dollar as the quote currencies, okay. So now we're going to take a look at gold. So this also affects gold significantly, and we're going to see that in just a minute. So moving on, this is a gold chart. This is a 12-hour time frame, and there's something interesting I would like to show you here. So let's see. So yeah, so I'm just going to draw this channel here on the gold chart and explain something very interesting I found last week. So right now it seems we are in a solid bearish trend for gold. So in our earlier analysis last week, we talked about going short after a bearish consolidation and a breakout. So I'm going to show you that when we go down to the lower time frame. So I just wanted to know that, okay, we are in a bearish trend for gold right now. So on a 12-hour time frame, we can see that price has been declining within this channel for the past, I'm going to check the date here. So this has been since March this year. Yeah, since March this year. So basically for about 4 months or so. So we have been in this massive bearish trend. So I think it's logical to think this is going to continue, because I'm just going to take this. So now looking at the trend, so coming down from here, for example, down, up, down, down. So it's logical to expect we would probably come below this channel, so come to the support level of this channel. So it's just based on probabilities, okay, but it's logical to think that way, that we're going to come down here. And mind you, on the daily time frame, or let me go down to the weekly time frame so I can make this clear enough. So we have our weekly support level here. So I'm just going to mark this out so see what I'm talking about, okay. So on the weekly time frame, we're having our solid weekly support level here. This is very important to pay attention to, because this could be the level that saves gold from further decline. So back to our 12-hour time frame. So taking a look at the chart now, we can see that we've got our weekly support level here. So we might have some bearish move, or get some bearish move, and probably bounce off this weekly support level if it holds. But if it doesn't hold, then we might be targeting the bottom of this channel, which means we could head lower if we get some sort of breakout from this weekly support level followed by retest as confirmation, and then followed by another bearish move. So just to illustrate what I'm talking about, so if we get something like this, excuse me, so if we get something like this, so let's say we move down like this, a break, then we get a retest, then we might see some significant bearish move targeting lower levels for gold. So that's it on the the larger time frame. So I'm just going to go down to, let's say, the 4-hour chart, so we can see clearly what's happening. Okay, let me say 2 hours chart, so we can take a closer look at what's going on. So looking at this, I'm going to get rid of this weekly. Okay, I'm just going to bring this down a little. I'm going to get rid of this actually. So looking at gold, so last week we talked about gold breaking through our trend. So we had this bullish channel like this, and we also had, I'm just going to adjust this for a minute. Okay, so yeah, so we also had this solid area of support. Yeah, so we had this. Sorry, the chart is looking a bit messy. I'm going to take a few lines of the chart as soon as I'm able to get this out there. So yeah, so we had this, and we also had our moving average. So yeah, our 200 moving average on the 1-hour time frame. So the moving average was used as a support level down here. That was like 4 weeks ago. So we used it as a support level, and we had this bullish run with that price breaking below. So price was actually around this level last week, and we talked about the only scenario to go short was to break through this mini support level, break through the moving average, have a retest, a consolidation, and then we go short. So we basically did exactly that as we expected. So we had our breakouts, we had a consolidation, another breakout, and then bearish move. So on the 1-hour time frame, I'm just going to show you something real quick. So our area of entry would have been on this bearish engulfing candle. So after our breakout retest, so we had this bearish consolidation, which I explained clearly on our previous analysis last week. So we had this bearish continuation pattern, which is kind of like a bearish flag. And on the retest of this support level, I'm going to adjust this a little just so it makes sense. So charts doesn't have to be perfect, okay? It doesn't have to be like a textbook analysis. So there can be variations from what you see online, what you read on books, but it basically forms the same pattern. So after we had this retest, we had this bearish engulfing candle. So just to zoom in a little, so you see this bearish candle totally engulfed this bullish candle after our retest. So at this level would have been a good spot to go short, or probably wait for the break of this support level or go short here. So either way, that would have still brought us down to a total of 240 pips. So if you had entered here, that would have been 300 pips actually. So not a bad trade at all. So we are currently below another significant area of value. Okay, so I'm going to mark this out on the chart. So this is it. So currently, excuse me, so we're currently below this area of value. Okay, so we had several bounce off this level. We had a double bottom here where we made this bullish move. So it's only logical to assume or to pick this level as a significant level, but right now there's been some sort of choppy movement below this level. So this is not a significant movement. Okay, so I took profit here actually. So I got in the trade here, and my TP was here, and I took profit. So the only scenario I would consider going long, going short for gold is if we get some sort of bearish continuation. Let's say something like this, and then a breakout. So this is what I'm going to consider. This is how I'm going to play gold to go short. So I'm not going to go long for gold anytime soon until we break this macro channel that's been holding our bearish trend for almost 6 months now. So this is a scenario in which I'm going to go short. So if we should keep making this choppy movement, I'm not going to go short on gold. I'm just going to stay away and watch the market. So what I was explaining earlier concerning DXY, so you see this movement from here down to this level was actually as a result of this bullish movement on the DXY. So this is the DXY chart right now. So this is DXY chart. So we had this bullish movement for gold, for the DXY, which is the dollar, and then it correlates with the bearish movement we had on gold. So this is actually one of the reasons why it's good, and it's it's worthwhile to pay attention to the DXY, because it's actually translates to how we trade major currencies or major commodities like gold and so on. So moving on, that's it for gold. Moving on, I'm going to take a look at EURUSD right now. Very interesting chart, very massive bearish trend. So this is 6-hour time frame on EURUSD. So we've been in this massive bearish trend since the beginning of this year. And something interesting we talked about last year was price moving back into this area of value. So we had this support level, 2 bounces of the support level, another bounce, and then a massive breakout. So about 2 weeks ago we had it run up, we tapped into the area of value, and then we had a bearish continuation of this trend. So this trend has held beautifully well. Like, it's crazy how sweet and how classic this looks right now. So I actually have been taking advantage of these trades, and if you follow us on Instagram, you'd have found out that we've been talking about EURUSD and how we're going to break this level, retest this level, how we're going to go short. So we've basically been following this trade for like 2 months now. So do check our Instagram page. There's a lot there to learn. It's just mind-blowing. So this is it for EURUSD. So last week we talked about this rising wedge and this retest, and we talked about going short after a breakout and a consolidation, and we did exactly that. Okay, we got exactly what we wanted, what we expected. So there was 2 ways to take advantage of this trade. So if you were an aggressive trader, you would have probably entered at the break of this this trend line. Okay, so the break of the support level of the ascending wedge or the rising wedge. So a break here would have made you, let's see, excuse me, I'm just gonna measure this. So a break here would have gotten you 170 pips, or after or entering after this consolidation would have gotten you 100 pips. So that was actually not a bad move. So I talked about waiting for a breakout, a retest, which we had. So if you should adjust your trend line here, you see that we had this retest here after the breakout retest. Then we had this bearish consolidation, kind of like a bearish continuation pattern or a bearish flag, so something like this and like this. So basically this is a descending, this is a rising, an ascending triangle, right? So you can draw this in a number of ways. So you could do this, or you could do this. So this is a an ascending triangle. Okay, so now I usually teach my followers that chart patterns are not meant to break in a specific direction. Okay, so when people see an ascending triangle, they expect the breakout to happen above, or to break the support level, so you get a bullish move. When people see a descending triangle, so something like this, so when people see something like this, they feel, oh, it's a descending triangle, so it's meant to give us a bearish breakout. Chart patterns are not meant or constructed to be broken or to move in a specific direction. They are just an indication to explain what's going on in the market. So whichever direction they break to, or you get a breakout, all you have to do is trade in line with your ongoing trend, and you will do just fine. Okay, so that's what we had here. So we had this breakout, we had this bearish continuation pattern, another breakout, and bam, there we have it. Nice trade, as I anticipated in our analysis last week. So that's it for EURUSD. Right now, in order for me to go short, I'm just gonna do this. Okay, so this is our area of value. I'm gonna mark this out real quick. So this is our area of value for EURUSD. So we had this so we've had series of, excuse me, I'm just gonna extend this a little. So we've had series of retests on this level. So 1, 2, 3, 4, 5, 6, 7 actually. So this is actually a very good area of value, acted as a nice support before, and then we had this good breakout with very nice volume. So we are having a slight choppy movement right now. So in order for me to go short, I'm just going to wait for something like this. It might not happen, but something like this, a retest, a consolidation, then before actually, excuse me, going short on EURUSD. So this is the only reason why I will go short on EURUSD. Okay, so there's basically no reason to just jump into a trade now, because I feel we might be heading, excuse me, because I feel we might be heading back to the bottom of this channel. So I'm just going to go to the higher time frame again so we can see this clearly. Okay, so this is the 4-hour chart. So I'm going to wait for some sort of bearish continuation pattern for me to go short on EURUSD. So if you take a closer look at this area of value, you find out that it looks similar to what we had here in the past. Okay, so this is what price action is all about: studying past price movements to make educated, guesses on where price will be heading in the future. So this area of value here is kind of similar to what we had here, but just in this case, after we had this breakout, it took us a few months before we went back to retest, and we had this massive bearish continuation pattern. So some sort of consolidation here to show that, okay, this bearish trend is going to continue. But at this stage, I don't think we're going to have a significant consolidation as we had here, because this consolidation already carried out all the consolidation we would have had in order to send price downward. So something else to pay attention to here is that if you notice, EURUSD is having the US dollar as the quote currency here, and since the US dollar was a bit strong last week, so I'm going to go back to the DXY now. So we had this bullish move for the DXY, which shows that the dollar is actually strong. And at the moment, looking at fundamentals, the euro is so weak right now. Okay, so that's why the strength of the dollar was actually strong enough to create this bearish momentum for the EURUSD, making us move in line with the ongoing bearish trend we've had before. So that's it for EURUSD. I won't be going long for no reason. So I've explained to my followers before on Instagram, because we usually update our Instagram regularly as compared to our YouTube channel. So I won't be going long on EURUSD. The only reason why we're going long is if we break above this bearish channel, then I would consider going long. But for now, it's just going to be going short at every opportunity we get to go short. So this is what I'll watch out for to go short for EURUSD. So moving on, GBPUSD real quick. So this is something very interesting. Also similar to the chart on EURUSD. So this has been in a massive bearish trend. So we talked about this last week. We didn't actually draw this channel, so I drew this recently to explain what I'm watching out for GBPUSD. So last week we talked about waiting for something like this. Last week was a very good week, I'm not gonna lie. Like, we made some really interesting trades, which we analyzed last week as well, last week Sunday. So guys, if you love the content, follow us, like the content, leave comments so you don't miss this awesome trade opportunities. Okay, so this is what we talked about last week. So we said if price was to break through this this trend line on EURUSD, then we'll go short. But I warned that we wouldn't be going short because we had this area of value. So I'm going to mark this out on the chart. So we had this support level, yeah, which is actually our area of value. So we talked about waiting for, so even after getting this breakout, we talked about waiting for price to break through this level of support before actually going short, and we did just that. So we had this huge breakout and then price decline. So even if you were to enter around this level, so stop loss would basically be above this channel. Okay, so for a better risk to reward ratio, that's why we advise to wait for the break of this support level, and we had this massive break. So going short here would have made you 180 pips, or 180 pips approximately. Then your stop loss would have been just above this high, and that would have been 100 pips. Yeah, so 2-to-1 risk to reward ratio, which is actually not bad. So that's a good trade, and you wouldn't have to wait for so long or for days to take profit. So something important to watch out for is we are currently sitting at a significant support level, because this is our last the last low we had on GBPUSD. So I'm just going to pick this real quick. So yes, I don't know why my computer is going so slow right now. So this is our area of support. Yeah, so this is probably going to hold, so I won't be jumping into any trade right now. So the same principle for EURUSD, waiting for some sort of bearish continuation pattern before going short. So it's going to be something like this. It's going to look like this. I'm just going to draw this. So it's going to be something like this: a retest of this support level, a consolidation. We might probably maybe test these levels, then a breakout. So this is something I'll watch out for in order to go short on GBPUSD. without this, I'm just going to watch the trade and look for a great opportunity to get into a trade for a short. But in order for me to get that, solid trade opportunity with a good risk to reward ratio, I'm going to wait for this pattern. So that's it for GBPUSD. Mind you, it might not necessarily, it does not necessarily have to happen like this. Okay, it might take a week, it might take a day, it might take a few hours. So as time goes on, I just move to lower time frame to find those bearish continuation patterns. Okay, I might even go as low as the 30 minutes time frame. Might go as low as the 30 minutes time frame in order to find those bearish continuation pattern. So it might be a bearish flag, it might be a descending channel, it might be a symmetrical triangle. Whichever pattern I get with the corresponding breakout is what I'm going to watch out for in order to go short for GBP USD, while watching out for these significant levels like this support level here. So price might just break through like knife cutting through butter. So I'm not going to rush into any trade. Okay, so if we should break through this level, I'm simply going to wait for a retest of that level, a bearish continuation before I go short. So if we should do something like this, maybe break through this level, then we have to retest it, consolidate a little, then I can go short on GBP USD. So this is how I trade, guys, using simple tools. You don't have to overcomplicate your chart, add too many indicators. Just simple tools, follow the trend, and you'll be good. Okay, something important to also watch out for is on the RSI, on the 4-hour time frame, we are currently extremely oversold. Okay, so there's a probability that price could reverse from this level for a bit before going downwards more if we're going to go down. So we might get some sort of bullish reversal, a consolidation before we go further downward. So this action here, so this bullish reversal or this consolidation here would actually help us bring back the relative strength index, which is the RXI, back into this safe zone before we go down again. So that's actually something to consider before taking any trade on EURUSD. I'm going to check this GBUSD, sorry. So checking EURUSD real quick. So on the 4-hour time frame, I'm going to go down to the 2-hour time frame. There seem to be we seem to be in the oversold region as well, but not as oversold as we have it in the GBPUSD. So moving on, USDJPY, another interesting chart we talked about last week. So everything right now is moving in line with the DXY. So the dollar is strong. Major currencies having the dollar as the quote currency are bearish, while major currencies having the US dollar as the base currency are bullish. So in this case, USDJPY. So we had this massive bullish trend. So as you can see, going back to the DXY, as you can see, DXY daily charts. I'm just going to go down the daily chart real quick just to show you something important. So on the daily chart for USD, for the DXY, you can see we've been in this massive bullish trend, okay? While for USDJPY, because we have the US dollar as the base currency, you can see the same bullish trend on the USDJPY. So if you take a look at EURUSD, so this is EURUSD, I'm just going to show you something important real quick so you understand why it's important to also pay attention to the DXY while trading these major currency pairs. So if you take a look, the DXY, this is the DXY, on a daily chart, it's been on a bullish trend. EURUSD has been on a bearish trend. GBPUSD has been on a bearish trend as well. So the reason is because major currencies having the US dollar as the quote currency, they are negatively correlated with the dollar strength index, which means they go in the opposite direction of the dollar strength index over time. While currency pairs, major currency pairs having the US dollar as the base currency, they are positively correlated with the DXY, which means they move in the same trend with the dollar strength index. So that's just something very important to pay attention to. So when you're trading major currency pairs, we are trading gold, we are trading crude oil, for example, you have to pay attention to this stuff because they're really going to help you with your trades. So now let's take a look at USDJPY real quick. So we had our massive bullish trend. So we had this area of value here. So we had a reversal from the top, which brought us back down to this area of value, and we bounced off this level one. What we talked about last week was actually a scenario to go long, which we did. Okay, not exactly as expected, but something very similar. So I'm going to go to the 2-hour time frame. So on the 2-hour time frame, what we can see is we had this trend line. Yeah, so it was something like this, I guess. Yeah, this was what we had. So we had something like this, right? Was this what we had? Yeah, yes, this is what we had. So adjusting for the highest number of touches. Yeah, this is it. So adjusting for the highest number of touches, so we had one touch here, we had another one, some sort of fake out, but I'm just going to leave that for now. So we had another touch here, another touch here, and we had this breakout, a retest, and we had this, move up to this area of value. So we had a good breakout from this level, which was a good opportunity to go long. So even if you picked this top, like this, I'm just going to adjust this like this. So even if you picked this two top, you are still going to get this breakout consolidation, and then this consolidation at the resistance level, and then breakout. So I'm just going to get rid of this line and just explain with plainly this area of value. So for USDJPY, excuse me, don't know why this PC is. So this is our area of value for USDJPY. So we had a consolidation at the area of value. We had a good breakout. So entering at this level would have been the best, just the best entry. So at this level, targeting these highs here. So 160 pips. So this high was an area of value to have taken profit, because we had this order block here. So this order block, this bullish candle before this bearish move, is our bearish order block. So at that order block is where you'd have had your TP, while stop loss would have been just below this area of value, which is at 70 pips. So 70 pips to 160 pips is actually a good risk to reward ratio. So I think this is going to go higher if the dollar keeps strengthening. So in order for us to go long for USDJPY, so going long is actually going to help us trade along with the trend. So in order for us to go long, we're going to wait for something like this. So something like this, some sort of bullish continuation pattern, and then bam, this is how we go long for USDJPY. So I'm not going to go short for USDJPY right now, because the dollar is extremely bullish. This as a result of the quantitative tightening that the Feds, the US government are undergoing right now, which is actually making the US dollar scarcer while demand remains relatively the same. So this is why the dollar is has been gaining so much strength, which affects other major currency pairs. So in order for us to trade in line with the trend, which is a bullish trend, I'm just going to go to the 6 hours time frame now. So we have to wait for something like this to show us that this bullish trend is actually going to continue. So this bullish pattern might be a bullish flag, it might be a bullish rectangle, it might be an ascending triangle, it might be a symmetric angle, but just something to signify that this bullish trend is going to continue. Then we go long. So we might get a retest of this area of value, we might not get a retest, but without a chart pattern showing that we're going to go higher, I'm just not going to go long, because there's no way to tell for sure if we're going to continue or we're just going to reverse. Okay, because at this moment it all depends on what the dollar does. So moving on, I'm going to take a look at Bitcoin real quick. So this is also another interesting chart we talked about last week. So I'm making this video on Friday, and it's going to be on Saturday, so it's going to be posted tomorrow on Sunday. So the price for Bitcoin might have moved before you get this video, because the crypto market never closes. So in this channel excuse me, we had price here last week. So we talked about a few reasons why we should only expect bearish momentum for the Bitcoin. Yeah. So I'm just going to explain again once more. So on the daily time frame, moving to the daily time frame for Bitcoin, you can see that we've been in this massive bearish trend, okay, right from the highs here. So we've been in this bearish trend. So we had a decline, we had an I'm going to call this a bearish flag. So we had this bearish flag, then we had a breakout, further decline, we had another bearish flag, further decline, and now we're having another bearish flag. Okay, so there is technically no reason to expect price to violate this principle. Okay, we've been in like two different bearish flag, and we've had bearish breakouts sending price downwards. So if this current bearish flag was to break, then I don't see any reason why we wouldn't go down to maybe the 15k or even the 12k levels. Okay, just something to pay attention to. So in order for us to actually violate this bearish flag, we have to go above. So we have to reverse and break above, and probably break above this other one here, in order for us to put in a higher high, retest, then something like this before we think about going long, for the long term for Bitcoin. But right now what we can see is just a repetitive action of what the market has done in the past. Okay, so we had a bearish flag, a bearish breakout, went down, another bearish flag, a bearish continuation pattern, we went down. So we're having another bearish continuation pattern. So going back to the lower time frame, so this is a 4-hour chart. So what we can see is within this channel, within this channel we had this massive breakout last week. So with this bearish move, so we are currently sitting at the bottom of the channel. So right now what I expect is some sort of a bearish consolidation, and then a continuation of this bearish move. We might also get something like this. We might also get something like this, bullish reversal, and like this. So anything is actually possible, but I'm paying attention to the fact that we might see this other action. Okay, this bearish consolidation and then a bearish move, because we are currently oversold on the 4-hour time frame for Bitcoin. So this oversold level, we need some time to go back to the safe zone before actually dropping lower. That's if we're going to drop lower. So if we should get these, then I could short. Something else to pay attention to here is that this channel is currently set at the bottom of we're currently taking the two lows of this channel. Okay, so if we should adjust for the most touches, then you're going to get something like this. So now adjusting for the most touches, we're going to get 1 2 3 4 5 touches. Okay, so this means we are currently trading below this channel. So if we should get this consolidation below and a bearish continuation, then I think we're going to go at least back to lows of $18,000 per Bitcoin. So that's basically what I think about Bitcoin. I am not trading Bitcoin right now. I'm only dollar cost averaging right now for the long term. So that's what I'm doing. But I don't think we are going higher anytime soon, or seeing those outrageous bullish price momentum anytime soon. So just going to play it safe, dollar cost average, and expect the worst from the cryptocurrency market, because the dollar is strong at the moment. So moving on, lastly we're going to talk about the Nasdaq. Okay, so Nasdaq is one of those indices. It takes the the index of 100 top industrial companies in the United States. So going to the 1-day time frame, okay, we've had this massive bullish run over the past 20 years for the stock market, the US stock market. But right now we are kind of experiencing some sort of bearish decline. Okay, so but we don't know when this decline is going to end. It all boils down to what the Fed does next month, sorry, in September, because we're anticipating some more rate cuts, more rate hikes. So if the Feds were to increase interest rates, then I expect the Nasdaq and all other major indices to get some sort of bearish momentum. So I'm just going to mark out a few levels to watch out for. Okay, so this is 6 hours time frame. So looking at these charts, what can we see? So I'm just going to mark this out. So this is our trend basically. So all I do is I use simple tools, watch the price action, watch the trend, and just trade accordingly. So now we've had this. I'm going to go down to the 2-hour time frame so we can see this clearly. So we've had this massive run up that's within our bearish trend. So this is kind of like a bearish relief rally. Okay, that's what it's called. So now we've had this breakout. We had a consolidation on this level. We had this breakout. So we could see price, coming down to this area of this trend line rather. So this trend support level. So we could see something like this. So if we should see something like this, then I will consider going short for Nasdaq. A clean bearish continuation pattern is what I'm going to watch out for in order to go short for Nasdaq. Okay, so while we while we think about going short for Nasdaq, there's a few important levels to also pay attention to. So we have this area of value, so many area of values here that could potentially stop our trades. So we have one here, we have another one here. So these are the two significant area of value I will be paying attention to in order to trade Nasdaq. So if you should also take these highs here, so you're going to see that. Okay, just give me a minute. I'm going to use the other tool instead. So I'm going to use this channel. So let's say we have this. Yeah, I think this is better. So yes, so this is our channel. Just gonna adjust a little. Yeah, I'm gonna adjust a little, just a moment. Yeah, so this is our channel, which flawlessly aligns with the trend line. Okay, so you see this bounce off the channel, it also corresponds with this trend line we drew here, and currently price is sitting at the top of this channel. Okay, so by the time we break back into this channel, we have that bearish continuation pattern, then I will consider going short on Nasdaq. So I'm going to also watch the kind of moves we make if we're going to make power moves, because these levels are potential levels that could stop our trade. If it's too risky at the time price make this move, I might just stay out of the trade and follow up with gold and the other major currency pairs. So that's it for Nasdaq. That's it for the major currency pairs and gold and the dollar strength index. I hope this analysis helps you carry out your trade successfully next week. If you love the content, guys, subscribe to our YouTube channel, follow us on Instagram. There's a ton of great content over there. I'm Sesan. See you next week.